Hello everyone, Charles here, and in this video I'm going to go over our market commentary for the upcoming week. I hope you all had a lovely Memorial Day, if that is a holiday that you celebrate, and if not, I hope you just had a great week. Let's see here, sorry. So, last week we had an initial break to the upside, okay? And that reached 23 pips, okay? So as far as results are concerned, you may or may not have gained on that, but that would be 0, okay? We stick to like 25 pip increments for our trades. If you trade both sides, like in a breakout method, then you definitely would have gained from the lower break. But we go by, as far as results are concerned, the initial, break, whichever way it went first, okay? So for the upcoming week on the New Zealand dollar 4-hour time frame, our new support level is right here. The reason I'm choosing this, well, actually, we can probably bring this up just a hair or bring it to this level right there. And the upper portion, let me make sure this is a large enough new defined range. I'm going to go just a little bit bigger here. Go up to this level. Okay. So with weekly analysis, I like to keep any 4-hour time frame within that 50 pip range, okay? And this is at 34, so that's beautiful, okay? You always want to stick to whatever rules you have for your trading plan. Always stick to them. If you missed out on a trade, that's fine. Move on to the next. Trading is not a race, okay? It's an investment, okay? And it's an investment in your future. It should be treated like a business, okay? So with that being said, support levels. The reason I'm choosing this is right here. It did it right in between this wick and candle body, because here we had a break up and here we had a little wick down. Okay, so that's why I'm putting that kind of right in there. If we go back here, we had resistance. Here we had resistance. Here. The ones that broke through, they were heavy breaks. Look at how large these candles are. Okay. Same with here. Okay. Then you come here, resistance, resistance, large break, resistance, 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 all the way through here, other than right there is a large break. Okay. So that is a solid support level. Here for, resistance, same kind of thing. Okay. We had resistance here and here. Big break. Resistance here, here. Big break. Resistance, break, break, and resistance with those two candles. Same here, here, all the way back, okay? History repeats itself. So, as far as our new defined range for the New Zealand dollar on the 4-hour time frame, the upper portion is going to be here, and our lower is here. Like I said, 0 as far as results are concerned. And we'll grab a screenshot. So here's the daily time frame for the New Zealand dollar. This is my favorite time frame to trade. If you're new to the room, or if you have not watched these videos before, the reason I like the daily time frame is because it is a much more reliable source of information, okay? I don't like to get in and out of trades constantly, all right? So I like to just have a stick to my trading plan, stay in a trade for months, sometimes it's only days, sometimes it's only weeks, but, I like the longer term trades, all right? Just a lot less stress and more reliable levels as far as support and resistance, okay? So last week we had here and here for our new key levels, all right? We broke here and we reached take profit 1. You had the potential to gain about 91 pips. If you just put it to take profit 1, then that's 60. Okay. For the upcoming week, if we take a look at this, we are below this trend line that we drew in a long time ago here. I don't even remember. It's been weeks, maybe months at this point. Okay. This red trend line here. Back on February, beginning of March, we had the professor show a short on its trend rider. Previous to that, back in February, we had our break below the Hall moving average. Okay, and ever since then, we've been experiencing consolidation. Okay, so price, if you look at this, so we had this break under here, set up here, push down, and then we came back up, and we've been in this tight consolidation period here. So price is still making up its mind whether the trend has actually changed to a short. Okay, until it actually shows that, we need to treat it as though it's in consolidation and it's still making up its mind whether it wants to continue the long trend or indeed do a trend reversal to a short. Okay, so technically we are still in a long trend, but we will see, okay, in these upcoming weeks what happens. So as far as new key levels, okay, we're going to go with same thing, key, support, and resistance. And that is also where we're going to put our take profit levels, okay? Like I said, history always repeats itself. Oh, let me just make sure I took a screenshot. I did, okay. For the last. So here, New Zealand dollar daily, it's in a consolidation period. New key levels are here. Okay. Grab a screenshot of that. Aussie dollar, 4-hour time frame. We had our initial break to the upside with very little resistance coming back. We had the potential to gain about 48 pips. So we put 25 as the results are concerned, okay, for performance. For the upcoming week, we want, like I said, we want to stick around that 50 pip range, find our key support and resistance based on previous levels. There we go. We are within the 50 pip range. And here is our new defined range. Oh, my internet is... Oh, looks like I'm still recording though. Let's save this. The internet has been a problem lately. Okay. Grab a screenshot and let's switch over to my favorite time frame, daily. Okay, so we had an initial break up, however, candle bodies did not break above. Okay, so if you trade, wow, sorry, internet is not happy. Make sure start recording. Oh, there we go. Okay. If you base your trades on breaks, it went about 20 pips in your favor, okay? If you base on candle bodies, you had the potential to gain 50, but it's more like 34, so I'd say like 25 pips there, okay? As far as the upcoming week is concerned, I am going to stay, I think, with the same key levels. We're in a 55 pip range on the daily. That is good. Okay. Price broke and it came right back to the same spot. Okay. So as far as that's concerned, price is indeed making up its mind still. In the Aussie dollar, we're in the same kind of boat. Okay. We're in a consolidation period. We've been in a consolidation period. Really. So here's our last highest high. Okay. Here was where we broke below the whole moving average. Here's where we broke below the trend line. And ever since then, so around end of March there, or end of February, excuse me, we've been in a consolidation period. So we'll see what happens. Price is making up its mind where it wants to go. Okay. The dollar franc. So we had our break to the downside, the potential to gain about 30 pips, so that leaves 25 as a result. Now we did create a new high here, so it looks like we might actually be going into, if you look at this, so we've got like a double bottom pattern here, ba-bam, ba-bam, there's your second hit, and then we came right up to this level here, our previous high. Then we had a heavy drop down, okay? So this is why I say be patient, okay? Because you may have gotten into this thinking like, oh, this is a trend reversal, trend reversal. If we look at the whole moving average, yes, it is showing that it's starting to head up. Yes, we did break above it, okay? Back here, end of May. Yes, we did come up to our previous high, but we did not really break it, okay? We're real close, but if you go to the top of these candle wicks, look at candle bodies, did not break. So, and then this candle here, it was like, nope, heading back down. So that's why I say be patient. You have to be patient as a trader. If you get into a trade where you become trapped, all you're doing is losing any profit that you've gained in the previous, days, weeks, months, okay? Be patient. You never want to rush a trade just because you think it is a trend reversal, okay? So here we are, we've got a 42 pip range here, beautiful. Let's really watch that, because it could be a beautiful setup for a trend reversal on the 4 hour. Until you have that confirmation, don't do it, okay? I mean, you do whatever you want, but I just don't recommend it. I would much rather be safe than sorry and miss out on some pips, So let's look and see what the daily's doing, okay? The daily, it's showing that it's wanting to head up, but we didn't create any new high here, okay? So until that happens, we're still in a consolidation period, okay? As far as last week's break, we did hit take profit 1 and beyond. You had the potential to gain about 51 pips. If you just went to take profit 1, that's 35. Okay. So we'll see. We'll see what the market delivers. And really, we headed right back down into the same key levels we were already at. So I'm not changing that. Okay. Now if we add in a second trend line, Let's take a look at this here real quick, because we have right here, and this is not following the current trend. I just want to bring right there. So you see back here, here is our break, experience resistance here and here. Here we're coming back up to it. So let's see, watch this trend line and see what happens, excuse me, in the upcoming weeks, okay? We're still technically in consolidation. Euro dollar on the 4 hour. So we had a break to the upside. Okay. We had the potential to gain 38 pips. That's 25 as far as results are concerned. Okay. If you trade both sides, then you would have gained from both sides. Price definitely is showing kind of like the dollar franc, which if you are new to trading or just new to these videos, the dollar franc and euro dollar are mirrored assets. That simply means that when one is heading up, the other is more than likely heading down. And if you look at their charts, they are usually a mirrored image, okay, or very close to that, okay. So you can use that as a trader to your advantage to really gain on both assets and on multiple time frames, okay. Excuse me. So as far as the upcoming week, our new defined range is going to be here. And we're going to do support. All right, there's a pretty good level right there. Okay. It looks like price is trying to push down, but like I said, you know, that candle, same with on the dollar franc, you know, it's pushing up. It still is not quite ready, okay? Be patient, be patient. I want to stay within that 50 pip range. It's 45, 44. Okay, so we're in it. This is the new upper. This is the new lower. Okay. And if we take a look at the daily, same thing, you know, we had to push down, but kind of had to back up. All right. If you traded last week's range, oops, if I grab this, you could have gained on both if you've got both, set up. You had the potential to gain about 44 pips. Okay. As far as the upcoming week is concerned, same key levels. We're still within that same take profits, same. Okay. We'll see what happens. Pound dollar, not much happened. Consolidation. That's all that happened. Okay. So all that stays the same as well. There were no breaks with candle bodies, so that's still zero. It's kind of boring this week, but that's okay. You know, that's why we're patient. Because remember, I mean, back at the beginning of March, that's when we had that break to the downside for the trend line. Right before that, we had the break below the Hall moving average. Price came down to here, and it looked like it was ready to do a trend reversal. However, we did not get a confirmation with our trend rider. We did not get a confirmation by creating a new low. Okay, you really want to break. This is that level you want to break before you have that full confirmation. Because if you zoom out, okay, When you're zoomed in, it may not look like much. All right, or it may look like, when price heads down, like, oh, yeah, that means we're ready. Okay, but when you zoom out and you look at the big picture and you look back, a couple of years, that move down isn't anything. Okay, pip wise, it's beautiful. I mean, that move there, that's 543 pips. Okay, so it's a great move, but you don't actually want to enter based on trend, enter thinking that it's a trend reversal and then get yourself trapped and then go down 500 and some odd pips. You know what I mean? Or have it go against you, I mean, look at it here. If you would have entered back here thinking this is a trend reversal, so it starts heading down, you create a new low here, and like, oh, yeah, we're at that trend line, it comes up, and then it breaks, and like, okay, cool, it's a trend reversal. Not necessarily, okay? Yeah, you had the potential. So like from here to here, 730 pips. Below trend line break, 180 pips. Okay, so it may look, at the time like, oh, nice, I'm gaining something. But if you would have entered that and not exited, or had a proper stop loss in place, then look at how this would have gone against you, because it never came back down. And we're now what? 1,415 pips against you. So be patient, my friends. Wait until things properly set up. And if you're new to trading and you don't have the knowledge of the support and resistance, and you don't have the trading mentality yet, you don't have that patience built yet, that's okay. But then at least wait for, some indicators. Okay, indicators are great. All right, you don't have to learn support and resistance. I highly recommend it, because then you can just go in and each week like this and set up your trades and follow whatever certain assets you want, or even if it's just one asset. Okay, but if you like I said, if you don't have that confidence yet, that's absolutely fine. But then wait until enough indicators line up. Okay, that's why I like the professor a lot, especially with the 4-hour time frame and the daily time frame. It is really solid on the hourly time frame as well, but you don't. Again, that's just not my style of trading. Okay, I like to stay in long-term trades. I don't really look at the hourly time frame. Every now and then, like, I'll take a glance, but it's just not my style. Okay, I don't want to get into a trade for a few days. I want to get into a trade for a few weeks or months. So if you wait, if you're new to the room and you haven't used the professor, this is the professor setup. Wait until the trend rider confirms. Okay, that's this blue here that's showing long. The Hall moving average. Okay, that's this line that's purple and blue. And the blue means long, the purple is short. Same with the trend rider. Purple is short, turquoise is long, or blue is long. Wait for so let's say, like where we're at currently. Let's take this for example, okay? So right now, this is the trend rider is showing long. The Hall moving average is showing long. If we go back to here, where price broke below the Hall moving average, that's a first indication, okay, that things are maybe doing a reversal. We break below it. Then price is making up its mind. It's dropping. Maybe you got in on it, maybe not. Who knows? But you really shouldn't have yet, because the Hall moving average is still showing long. The trend rider is still showing long. All that's happened is price has broken below the Hall moving average. That's just the first indication. The second indication is the Hall moving average turning purple, which it did right here. Okay, so a month later, 2 months later, it turned purple right here for just a short minute. Okay, not just a minute. It was purple for a few days. Okay. Anyway, broke below. Then we have this as our second indication. Price is below it. Beautiful, beautiful. We're just waiting for this trend rider to show purple, okay? Which it always shows above, so you'd be watching for little purple dots, okay? These little blue ones to end and the purple to start up here, okay? But it didn't happen, okay? So if you would have gotten in based on the break below, you could have gained a little there, sure, but then let's say you waited and this turned purple and you're like, oh, that means the trend rider is going to turn purple. It doesn't necessarily mean that, okay? And in this case, it absolutely did not mean that, okay? So if you would have entered based on those two alone, right now, you'd have a 522 pip deficit, okay? That would be against you, all right? Wait for things to properly set up, all right? I was tempted at this point. When we came down to here, it was like, oh yeah, things are happening. It's turning around. I think I even said it in a few of my videos, like, we're just waiting. We're waiting for that trend reversal, but it didn't happen. So it's good to be patient, okay? If anything, you wait until price like breaks above. I'm like, oh yeah, we're still in the long. Wait for that retracement. There's that retracement. Gain a little. Okay. Stick with the trend. The trend is your friend. That's all there is to it, especially on long term when you look at the long term. Okay. So maybe you enter based on a 4-hour time frame setting up, but always look at that daily. If that daily shows different, don't enter it. Just wait. Okay. So those are the things you're waiting for with the professor. Again, just to say it one more time, break below the whole moving average for a short. Okay. Opposite for a long. Trend rider, whole moving average turns purple. There's your second indication for a short. Now we're waiting for that trend rider. Okay, so then it went against us, and now everything is showing long again. Okay, I think right now we're still in that consolidation period. If we break above the 1.42449 level, then it's definitely long. Okay, we're just continuation all the way. All right, so we'll see. We'll see what happens. So that's about it, you guys. You guys have a good week, and I will see you next Sunday. Okay? Have a good one.